can just get him right now to the next question I have. All right, thank you. So yes, I know Kika really touched a lot, and then Dr. Harrison also have also touched a lot on data. But I tell myself we can do more justice to questions when it comes to predictive analytics, when it comes to data, other than the powerful man himself. And then we all know that data is the lifeblood of any artificial intelligence model that is created today. I mean, it is actually that force that drives any artificial intelligence work or any generative AI today is massive data set that is relying on. So I want to ask, how do you foresee the evolution of predictive analysis within financial institutions? um, what do you see as those specific applications that you envision for predictive modeling in critical areas such as risk management? Dr. Harrison said some things around fraud detection and customer retention. How do you see predictive analytics playing in all of these? What are those um, what's the future really of the financial sector, and when it comes to predictive analysis, how this development is expected to enhance decision making, mitigate risk, and drive customer engagement and loyalty from an increasing data driven environment like a financial institution.
Thanks, MJ, for this. And of course, can you hear me?
Yes, loud and clear.
Great. I think, I mean, a lot of everybody's talking about AI and stuff, but AI is not new, right? I mean, I don't know if maybe I can bring the audience in. When did it start? When did AI as a field start? Just type the year in the chat. If you can predict, don't Google it, please. Just type what comes to mind. When did it start? This AI thing that we're talking about. You can guess. Okay, give me a range, a decade, the decade that it started. 1980s, 70s, what type?
Yeah,
2004, Jennifer, you're far, 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 far in the future. It's in the past, far in the past. Nope, 2000. Well, it started around like 1947, around 1940s, not even
70
47,
years ago.
1940s.
Wow.
1940s, yes.
Yeah.
So the one you would know well is Turing, right? Alan Turing, when he kind of cracked that code, the Enigma code for the German code in the war. So he cracked it with a machine. That was kind of the start of AI. And he said something then. He said that, look, AI would really come of age when you pass the Turing test. So he devised this thing called the Turing test, where he said, look, if you can be speaking to AI, talking to AI, or chatting with AI, and you cannot distinguish it from a human being, then it has really reached almost the level where we should start getting scared. And really, I think that's where we are now. That's why the whole world is abuzz with AI, because the last few years, AI has actually reached that stage. I'll probably post something on the chat. One big issue when it comes to risk and AI is something called hallucination, AI hallucination. What does that mean? Hallucination in real life, what someone's hallucinating, right? Just saying things. But AI says things too. And that's because this generative AI field that we're in, it is generating stuff from all the data, all the things it has learned, right? And it's generating from scratch. And just like us human beings, we can say things that are wrong, right? But this one says things that are wrong very convincingly. So there's a huge risk there. So you could say 100, maybe 99 things right, and then one thing wrong, and someone dies. Who takes that responsibility of that person that died from that wrong thing that AI did? Is it the chief risk officer? Is it the chief information officer? Is it the CEO? Who will take the responsibility? Because AI obviously can't take the responsibility. So there are risks, right? And those risks kind of fall into that hallucination that I talked about. It's a big issue. The people that have built what is going on now are not fully aware of how it works. They have an idea, but they're not fully aware, so they can't replicate the same results. But as I said, AI has been here for a very, very long time. One quick example I'll give is your Netflix account. If you go on Netflix and just chat, open Netflix, it knows your history and knows, okay, well, potentially, what would this person like to watch? All that is AI. all your social media. Every time you put a like, it's that like button. The intern, I think that was in Facebook, that kind of brought that like button. That's huge, because at the end of the day, you need clean data, and there are certain triggers. You have various triggers that you use to determine certain things. So that like and unlike button, that's huge, because they can say, okay, what are the things they like? Oh, these are all the things he likes. What are other things, other people that like this? What do they also watch? What do they also talk about? And it comes down to financial institutions as well. How do we predict, how do we measure risk? Because every financial institution, what they're interested in is managing risk, right? So you have an insurance company, at the end of the day, is giving out life insurance. You want to understand that risk level. What is the risk profile of this person that we're giving this insurance policy to? The bank, what's the risk profile of this person we're giving a loan to? So as you know, in Nigeria, we don't have really strong credit rating agencies. We're not really strong on credit. The US, every other developed country has that really well established. And just like telco, you remember we used to have what, 200,000 lines in Nigeria before the mobile field, but now we probably have more lines per person than some countries in Europe. And that's because we just leapfrog that technology straight to mobile, right? Same thing will happen around this field, where we have, yes, artificial intelligence has come in and we can jump certain hoops. But the issue there is we need the foundational data. We need clean data. You cannot, as a bank, maybe an insurance company, you cannot not have clean data on your customers. You can't say, okay, I pick out this customer and I know everything, all the transactions I've ever had with him. We don't have clean data, and that's going to be a big issue, because it's only one version of the truth you need to have. We have multiple versions in different silos, in different databases, and it's going to be very difficult for us to harness that, right? So in credit risk management, or you need to start thinking of alternative credit models. So quite a few startups are already doing that and going to disrupt the financial space. So, I mean, you could check your phone habits. How many of us here, okay, let me ask another question. How many of us have left our credits in our phone to die before we recharge? When was the last time your phone died, as in you didn't have any credit and then you had to recharge? For me, I can't remember when, but anybody here, if you remember, then you're a higher risk that you're not going to pay off your loan. It's because they've done that predictive model that says, hey, if you have, I mean, every single time you have to remind yourself, it goes off and then you now recharge, or maybe you use the phone or you make calls around 3 o'clock in the morning and you're not a security guard, you're not, so you're trying to take advantage of those cheaper rates. But there's so many phone habits that we do, right? That is kind of predictive of whether or not we're going to pay off our loans. And that data is being mined now. We have those machine learning models. We have artificial intelligence that can actually scale up the mining of that data. And it's cheap, and it's getting cheaper and cheaper and cheaper every day. So they'll be able to predict using those parameters, using your social media habits, using your habits in general to know whether you're risky or not. And really, that's what financial institutions are, is measuring risk. And of course, the industry or the specialist that does that best is the actuary, right? Those I think those actuaries, if they can leverage artificial intelligence, they're really going to do extremely well. So actuaries are those that analyze financial risk, cost and risk and uncertainty. They use all these mathematical models, statistics, and financial theory to assess risk and potential of a potential event happening or not happening. And so they work mostly with insurance. But yeah, I think that skill set with AI, with technology, is going to be a massive game changer. But really, you don't need that deep skill with the AI we have now. I mean, I used to want to learn how to code. But right now, in the next, 3-4 years, there'll probably be no developers, because AI will be able to do all the coding. But you still need to know a higher level of coding. You need to have a general idea what this whole thing is about, so you can actually review the AI. Remember, I said it hallucinates, right? So you can tell lies very convincingly. So the future is very interesting, but I think companies should focus on, look, let's clean out our data. And what's happening now is data silos are falling, because at the end of the day, you need the data all in one place for AI to really work for corporates. So you have a First Bank, how many hundred and something years old? Do we have that data for that 100 something years that we can pipe through AI through it and